Welcome to Bro Billionaire. We are going to discuss Nifty with Elliott Wave first, and then we'll check price action. This will be a short video. I will not take much of your time because I'm also quite confused with the wave counts. We had this wave count of three waves moving up, and we were looking this like a leading diagonal structure. But now this fifth wave, we are assuming that it has now become bigger than third wave. So this wave count we need to dump. So you can see here clearly, right? So 3367 is the length of this wave, and then 3450 is length of this wave. So this one is bigger. Anyway, this is wave one we were considering. This is two we were considering. Third, fourth year, and fifth year. So now the fifth has become bigger than third. One is already bigger than three. So this is not a proper Elliott wave count, and this cannot be leading diagonal structure. Unlike Bank Nifty, where we have a clear wave count, right? In Bank Nifty, we clearly see a leading diagonal structure, but same is not followed in Nifty. And yeah, I'm quite not having good insight on Nifty, but yeah, Bank Nifty is looking like this: 1, 2, 3, 4, and for you, now we could be in a correction, and we could have we could be in a B wave, okay, C wave of a B, and then we can have a downside, or it could be a triangle or something if this is not a leading diagonal structure. But yeah, another up move can be pending. So in Bank Nifty, you can label this as 1, 2, then this could be 3. We could be in a fourth wave. Once we complete this consolidation, and we'll make one more top, and then we could potentially give a dip. Do not consider any dips until the price closes below 13 EMA on daily chart. We should see some gaps. We should see an aggressive drop. Then only consider that the market is in correction phase and we could be in wave C. So coming back to Nifty, we don't have a clear wave count. I will fix the wave counts. I need to spend some time on this. I already tried doing that today, but I'm not able to come up with a proper wave count because the proportion of these waves are not matching when we are plotting them 1 2 1 2 or 1 2 3 4 patterns. Someone can plot them as completely impulse structure with 1 here, 2 here, 1 2 here, and again 3 4 5 here. This completes 1 2 3 4, and then we could be in a fifth wave. That's what they can assume. Another way can also be there, but I don't want to confuse you right now. Let's forget the wave counts of these particular waves for now. I will come up with that, but here I can plot a wave counts here. We have some clarity, some degree of clarity, not completely aware of the wave counts internally, because the structures are not so clear impulse. So whenever the structure is not clear, you should not trade. Okay, so here 1 2 can be plotted, 3 4 can be plotted. Okay, the fourth wave is not breaking the top of 1, so it's still valid. Then here 5, so this again 1 2 can be there. We are considering this as end of one correction. 1 2 here, then we completed one impulse structure here. Okay, so this can be 3 4, and the fifth can be small wave. We are not considering this as something big. So in this wave you can clearly see the wave counts. In the third wave, the wave counts are quite clear. ABC is also clear. So now we are assuming here the final fifth wave could be pending, and we can have one more push higher. So how to get the target for that? When you plot Fibonacci on these 3 points, you get 0.600 Fibonacci as 22,320. Okay, this is the target that you can get. Another way to get the target, you can also plot the fifth wave's target with this particular, in this particular way. Okay, so let's plot it here. Okay, so I don't think it'll break this trend line, but yeah, so this can be another target, but I will not consider that 22,541 as of now, because clearly on daily time frame, if you see here, I'll go and hide this one. If you see a daily chart from this point onwards, this acting as a resistance, now acting as a support, by the way. So this is the resistance, 2 candles broken down. Here hammer, broken down. Again a red candle, then gap down opening, recovered, making a big low. Okay, intraday this was a big fall, and then we have again red candle closing the gap. Gaps are missing. This clearly shows there is no full strength for going up unless there is a gap up opening and close above this particular range. Okay, 22,150 or 200 zones. Above this we need a gap up close, then only I will consider the strength has come back on the bullish side, otherwise I'll consider the downside. So what is the downside level we need to watch out from? 320 zones, right? So let's consider 320 here. Okay, and when we start drop on the downside, we should come back towards 0.600 Fibonacci at least. So I'll consider that as this level, 21,600. Okay, so from top we should make an hourly red candle or break previous day low. That is a good signal, breaking the previous day low. Then I would consider a move like this on the downside towards 0.600 Fibonacci. If 21,600 is also broken, then I would again turn bearish. This could be completion of a larger degree wave, and we could have potentially a downside on potential on the downside. So as of now, I don't have a proper wave count, so I'm relying on the levels, and I will update the wave counts in a next video. But for now, I'm assuming 22,320. If there is a rejection on hourly time frame or it breaks the previous day low, then I will consider that we are heading for 21,600. So this could be a completion of wedge structure and we could potentially drop on the downside. So why is that? Because why am I bearish now, right? So if we consider this as the end of one correction, then this will be 1-2 and this will be 1-2, right? 1-2-1-2 pattern. The third wave should be stronger. It will not make another 1-2. Okay, otherwise this will not be a third wave, and then the idea remains that this could be fifth wave of a wedge structure as it closed the gap. If it would have been bullish, this particular resistance as triple will not be considered as triple top, right? It would have been broken out with a bullish gap and sustained that gap. The gap is not seen in the last session, so that's why I'm not considering this as a bullish move. Let's go and check the price action. We don't have much to consider here on the price action chart. You can clearly see everything is bullish here, right? Right from the price is trading about 13 EMA. So this is 13 EMA line. All the long-term moving averages are still not touched. We once tried to touch 48 EMA, but then again bounced back. Aron indicator is considering again bullish move. Around green line above 70, around red line below 30 is full bullish signal, just like this area previously. And some consolidation was there, but right now it has turned again bullish. RSI is above 60. When it goes above 70, we will have a more bullish move. So all in all, price action says here that it's still bullish, but there are no gaps. So we should be not considering a fully bullish approach even for the price action. Until and unless it makes higher and higher low, it's still good. You can go and play in intraday. You can trade options and try your luck on on hourly time frame or 15-minute time frame. But yeah, that's up to you. Here, I consider this price is still bullish. It's trying to close strong about this particular resistance, 22,150, but it does not have a gap yet. So I'm not considering this as a completely bullish. I'll be cautious and I'll look for a downside opportunity, small downside opportunity. So here you can see the 48 EMA is coming somewhere near 21,600. So price will retrace towards this if we have one more close below previous day. Okay, so here it's still making higher high. It dropped below previous day here, but recovered and closed below, closed above the previous day's candle, right? So that's again sign of recovery here. But right now we have to watch out and look for potential downside opportunity if one of the previous day lows is broken. That's all for today. If you have any doubts, ask in the comments. Thanks for watching. Have a great day ahead. Bye-bye.